Good morning. Thanks for tuning in. You're watching the F&O Show on Bloomberg Quint Live, India's first digital live streaming business news service. I'm Navneet Saluja D'Souza.
Good morning, Navneet. I'm Agam Akil. Here are the headlines. Markets have given up early gains after the U.S. hiked tariffs on $200 billion of Chinese goods to 25% from 10%. Open interest has surged in Kajaria Ceramics and V-Guard. Both stocks are seeing a surge in, OI. HCL Technologies is the top loser on the Nifty after its fourth quarter earnings. And Voltas too has seen a decline after missing estimates in the March quarter. Futures see longs unwind. Now, the United States has hiked tariffs on $200 billion worth of Chinese goods to 25% from 10%. The Chinese Commerce Ministry has said it deeply regrets the tariff hike. Derek Wallbank, breaking news editor at Bloomberg News, is now joining us from Singapore for more. Derek, what are the updates here?
Well, the move that everyone feared has now happened. The U.S. has hiked tariffs on Chinese goods, as you say, about 25% on about $200 billion worth of Chinese exports. Now, it's critical for the audience to know that this doesn't necessarily hit everything right this second. There's actually a bit of a delay here because stuff that's already on a boat bound for the United States, that's not touched. It's stuff that's shipping starting now. So if you missed your race to the port, you missed your race for the boat to set off, now you've got it. But if it's already underway, then that's okay. That brings a little bit of a bridge frame before a lot of this stuff sort of gets in there. Talks are going to continue in Washington tomorrow between Liu He and the U.S. side, but we didn't get much good news today. Talks made little progress, according to our reporters in Washington, so we'll see what they say tomorrow, but there's no signs of a breakthrough as the tariff imposition hits.
Okay, Derek, thanks a lot for bringing all those updates. And clearly, back home in India, we did have an opening, in the positive territory after the index has seen losses of over 400 points in the last 7 days. But those gains have been shrugged off now after the news came in that U.S. has gone ahead and increased tariff to 25% on goods worth $200 billion. So let's quickly now take a look as to what's happening with Indian markets. Benchmarks are still, they've given up their gains. Nifty is now trading below the mark of 11,300. I think it's just the bank Nifty which is holding up in the positive territory as we speak. And the premiums too have been falling on the Nifty futures, currently at about 24 points. Pull up the broader market indices as well. They're holding up mildly, I believe, both the small cap and the mid cap, but they too have given up the gains which we had seen in the morning. So 37 points higher for the mid cap index. The market breadth will actually give you a better picture of the entire listed universe. So still holding up in favor of the advances, but let's see how it pans out during the session. I think the worry for this market has now been since Nifty's lost about 400 points from 11,700, Bank Nifty almost about 1,000 points. The PCR now, the Nifty put call ratio, has been inching towards that level of 1, which does indicate that the market is now in an oversold territory. And if one were to look at the maximum open interest concentration for the next weekly expiry, which is on 16th May, the maximum OI is at 11,500 call and the 10,000 put. So this wide range, does it indicate there can be any sort of bounce back in the short term? We'll have to wait and watch for that. But clearly, if one were to go by the FI setup, what's been happening, if you compare the data from the start of the series, they've been cutting their long positions. And if you look at the longs at the start of the series was 75%, that ratio has come down to 61. Particularly in yesterday's session, we did see major unwinding of the long positions coming by. And similar is the picture on the index options side. The positioning does seem to be pretty much bearish because they've bought more of puts, and the ratio of call short as compared to start of the series, which was somewhere about 38%, that's moved up to about 42%. So Agam, there are global factors, but now since we're inching very closer to that date of May 23rd, we can expect more volatility to come by. And clearly, the open interest is not surging on Nifty futures, which is indicating there is lack of participation now in the system.
Certainly, and I'm sure a lot of traders out there will be hesitant to take positions ahead of, the very important couple of weeks coming up ahead. But let's talk about stocks, and we will talk about those stocks which are seeing an increase increase in open interest, starting off with that list. And there are quite a few. Kajaria Ceramics and V-Guard Industries, as we suggested, are seeing fresh short positions at this point, considering both of them are looking at a decline as far as the spot goes. IGL is largely flattish, but still seeing an increase in OI. But that is not the case for Mahanagar Gas. So that is again looking at a drop of 5% in its underlying, 23% gains in open interest. So clearly a case of short positions being built up there. SRF again, well, largely flat. In terms of unwinding, we have Hexaware Technologies, Apollo Tyres, pardon me, and Reliance Industries looking at some amount of unwinding. Reliance Industries is actually looking at about a short covering after the kind of losses it has seen of late. But again, it is going to be about those stocks which are seeing a sharp surge in open interest as well as a sharp move. Mahanagar Gas and V-Guard Industries, case in point.
Okay, so those are the stocks that are in focus right now, but there are few stocks that we would like to take views from our experts, and one of them is HCL Technologies. The stock's fallen after posting its numbers. I think the conservative guidance from the organic business that they've given that may not have enthused the street, but the stock, however, is trading above all its key moving averages. And interestingly, a view on IGL that's required, because yesterday there was a lot of build up on the open interest side and there were some long positions seen, and the stock has been outperforming the markets where the market is down for the week. This is up almost 2 to 3%. And the third one is Voltas, which is trading with cuts, and the reason being the numbers were pretty weak on all parameters, be it top line, bottom line. Even the operating performance of this company has been quite weak, and the stock has been trading below all its key moving averages, 50, 100 and 200-day moving average.
Okay, so while we do discuss these stocks, before we get in our experts, here's a reminder: if you have any queries regarding futures and options markets, you can call us on 022-454-04141, or of course write to us on Twitter, Facebook and YouTube. Don't forget to add the AskBQ hashtag. Let's welcome in our experts for the day then. We have Nilesh Jain of Anand Rathi joining us, and in just a few moments from now we will also have Gaurav Bissa of LKP Securities on the show with us. But Nilesh, good morning to you. How is the trade setup looking like? 7 straight days of losses, possibly another 8th day should we see the indices decline today as well. What's the setup?
Hi, morning. Well, you have rightly mentioned 7th straight session. I won't be surprised it would be 8th straight session of a losing streak, because if you look at the overall structure, it has broken down from the levels of 11,550. The range was 11,550 to 11,850. There was a 300-point range. It broke down from that. Now, immediate target that we were expecting was of 11,250. Now, if you look at yesterday's trading session, it has made a doji kind of a candlestick pattern on a daily chart. So the low was 11,255 in the spot. So that is going to be the immediate support for the time being for any pullback rally. But if you look at the overall derivative structure, we have seen shifting of open interest base from 11,300 to 11,000 in the weekly expiry. So 11,000 is the immediate support from short to medium term perspective. If you look at the derivative data, again on the call side, we have seen continuous call writing at 11,400. So this setup clearly indicates call writers are still active in 11,400. So as long as trades below 11,400, we could see some sell on rise kind of a strategy could be applied in this kind of a market. Any rally towards 11,350 to 11,370, so that would be the perfect level to initiate a fresh short position. At this moment, I would say it's better to avoid initiating any particularly any strategy in the future, because risk and reward is not in favor of a bear. So one should use any rally to realize a fresh selling opportunity. Whereas on the other hand, if you look at the Bank Nifty structure, again it has a similar structure to the Nifty, but again it looks slightly positive compared to the Nifty. No doubt it is not sustaining above the levels of 29,000. So that is the immediate level that the Bank Nifty has to surpass and close above the same. So 29,000 in the Bank Nifty on a high side, whereas on the lower side 28,700. So that is the immediate support.
Okay, so Nilesh is saying not to take any position on the future side, but he did recommend a bear put spread on Nifty. And for all our viewers, let me tell you what a bear put spread is. It is achieved by purchasing put options at a specific strike price while also selling the same number of puts with the same expiry date at a lower strike price. Well, the maximum profit using this strategy is equal to the difference between the two strike prices minus the net cost of the options. Okay, that's about the options strategy by Nilesh. But Nilesh, also tell us which are the individual stock futures that you would be recommending to trade into today.
Well, let me tell you about the strategy that we are recommending bear put spread, where one can utilize this opportunity where the undertone is still bearish. So I would say one can buy one lot of Nifty 11,300 put strike, whereas one can sell one lot of a Nifty 11,250 put strike. So the total spread, the total outflow is coming around 18 points, whereas one can get a maximum reward of 32 points. So that is still, if you look at the risk and reward, still in the favor. So the undertone is still bearish, so I would suggest one can initiate a bear put spread strategy. Well, I have two sell recommendations. If you look at the oil and gas counters, still looking very negative on the chart. We have seen lower high and lower low formation. BPCL is one counter where I would like to suggest initiating short position. One can sell BPCL at current level as well. The stop loss should be placed around somewhere close to 370. That should be the stop loss, whereas target would be at 354. My second sell recommendation would be on Siemens. We have seen a fresh breakdown that has come today. One can keep a stop loss of 1090 for the target of 1040. One can initiate a short position in Siemens as well as BPCL.
Okay, so two short calls coming in from Nilesh. I believe we have Gaurav Bissa who is with us. Gaurav, good morning to you as well. Let's talk about the indices first. A lot of weakness coming in, albeit not a sharp weakness, but it's still possibly the 8th straight day of losses. What's your view on the indices now? How would you tackle it?
If you look at the indices, 11,222 to 40 is a very immediate support, and if you look at the move that we saw from levels of 10,600 to the swing high that we made about 11,800, the 50% retracement comes around level of 11,220. There's a bullish harmonic pattern that has been formed, which will get triggered at levels of 11,240 to 50, almost the levels that it touched upon yesterday. So as long as we are trading above 240 to 50, we can expect a bounce back towards level of 11,450, 11,500. I would not play on a very aggressive note, but probably any dip towards 11,250 can be bought. Keep a stop loss of 50 points. On the upside, one can play for target of 11,350, 11,450.
Gaurav, what about the individual stock ideas for the day?
The first recommendation today would be a buy call on Britannia. We have seen a strong correction coming in the name, and a lot of shorts were seen getting built. There is clear-cut exhaustion that we are seeing in the name. It's given a small breakout on hourly charts. Minor amount of longs are seen getting built. In all likelihood, it can head towards a level of 2760, 2780. One can keep a 30-point stop loss and buy Britannia at the current levels. Second recommendation would be a short on Dr. Reddy's. We have seen a strong resistance getting formed at higher levels, and some amount of unwinding has been seen. One can play for target price of 28.40 and short it with a stop loss of 29.35.
All right. Well, those are some stocks coming in from Gaurav. Now, let's talk about some stocks that we want to address as well. And right at the top, the big Nifty earnings coming through last evening, that is HCL Technologies. Now, well, the earnings may have been a little bit of a miss, if not a very large one, at least as far as the quarterly numbers are concerned. The annual numbers were more or less in line with street expectations. But that said, we are seeing a very sharp correction as far as HCL Tech is concerned today. This perhaps could be something to do with the guidance, and even though the guidance given out for FY20 in terms of revenues in constant currency is 14 to 16%, is again in line with what the street was working with. What a lot of these analysts may not have taken into account is possibly the 100 basis points cut in range. So earlier, or perhaps the previous year, we were working with something like 19.5 to 20.5%. This time around, for FY20, the operating margins guidance has been set at 18.5 to 19.5%. Those are your fundamentals. For now, if we can have that chart back, because it did seem like it's okay, so it's lost out the 50 DMA, sure, fair enough, but it's still well away from the 200 DMA. On a 3-month basis, after looking at today's 5.5% cut, it has only gained as much as 1.6%. So we really aren't seeing too much as far as HCL Technologies is concerned, even though it has gained substantially at one point in time, outperformed the Nifty 50 and the Nifty IT index. Well, and it's also one of the cheapest stocks in the top 5 IT basket. Nilesh, can I come to you on HCL Technologies? After today's move, would you be a little more cautious when it comes to taking longs in HCL Technologies? And as a whole, in general, how would you trade it now?
Well, you have rightly mentioned we have already seen the correction of almost, we would say, we have seen correction from the levels of 11,080 to 1,080, or almost 100-point correction. But now the crucial level that should be watch out is at 1070. So that is the immediate support level for the HCL Tech. Well, if you look at the weekly chart, the overall structure still looks positive. It has made higher high and high low formation on the weekly scale. On the daily chart, it is no doubt showing some sort of a weakness, but I think it should find some sort of a support near 1070 level. So that should be the immediate stop loss for any long position. If at all it breaks below 1070, then could be some sort of a selling pressure that eventually take HCL Tech towards 1000 or maybe below that. So 1070, that is the immediate support level, whereas on the high side 11,010. So that is the immediate resistance for the HCL Tech.
Okay, 4.5% lower and slipping below the 50 DMA in today's session. That's about HCL Technologies. The other one is IGL. Remember, the markets have been weak, but this is one stock which has outperformed the markets, at least for this week. It's up 2%, where Nifty has seen a fall of nearly 2 to 3%. The futures are indicating open interest build-up of 25%. It's just not today. Even in yesterday's session, the open interest by the end of the day was up nearly 13 to 14%. So, Gaurav, if I could come to you on IGL, how's the setup looking like? What are the charts indicating? I know the stock's not moved too much, but yesterday there were some long positions which were seen, and this morning the open interest is up nearly 26 to 27%.
Well, if you look at the past few days, it has been consolidating on a very immediate basis. It has been forming a small base at levels of 304, 305. One can buy on any dip towards 310, 307, keep a stop of 305 on the upside. It can retest the levels of 322, 325. So for me, it's a buy on dip stock. At these levels, the stock is looking good. It's given a small breakout as well, but the risk would be more lucrative if it falls a little bit, or if it corrects a little bit, then I think it would be more lucrative.
Okay, so that's the view on IGL. And of course, IGL is flat, but look at Mahanagar Gas. Let's bring that out as well, because that one is buckling under pressure. And well, this is possibly because the broader markets may be seeing some, some issues.
This is reacting to its numbers. It was a miss on earnings.
Right. So it's a big miss on earnings. And so while we are talking about IGL, we can also address Mahanagar Gas, and there's 23% increase in open interest there. So, Gaurav, if we can come back to you on Mahanagar Gas as well, what's the play here? The same view that you have on IGL?
No, it had given a strong breakout above level of 955, 960, and it was retesting those levels. So I was quite hopeful that maybe this particular level might be sustained on daily basis. But now it's given a small breakdown as well. I would not be interested in buying. Rather, for me, it's a sell on rise candidate. Any jump towards 910 can be utilized to build fresh short positions. Keep a stop loss of 922, 923. On downside, can again slip back towards level of 870. So probably at here you can expect a small technical bounce of 10-15 points, but that one can utilize that either to exit the existing positions or build fresh short positions.
That's MGL for you. Earnings miss, and Jefferies in fact has maintained their underperformed rating with the target price of 760 post the numbers. Before we move to our viewer queries, I just want to address Voltas. This is another counter which is reacting to weak set of numbers. The stock is down. Can you pull up the intraday chart? I think it had a gap down opening. I'm not too sure if there is any sort of recovery which has taken place in the last half an hour of trade. At least the intraday chart will give you a clear picture. Yes, it had a gap down opening. It was down about 3 to 4% when the markets opened. Mild bit of recovery definitely seen, but it's still sitting with cuts of almost 2%. Nilesh, if I could come to you on Voltas at 562, would you recommend taking any trade, or for traders who missed out taking short positions in this one at current levels, would you recommend a fresh short?
Well, as of now, it is trading in no trade zone, I would say, because it is the risk and reward still not in favor of the bulls. The downside is still intact. We could see some sort of a selling pressure towards the levels of 530 or maybe 520. It has a major support level near 500 zone. So if at all it falls towards 530 to 520 kind of a level, then there could be possibility of some initiation of a long position from the stop loss of 500. Well, today we have seen some sort of a mild recovery. There could be possibility of a pullback rally which may take towards 570 or maybe 575, but still as of now it is trading in the no trade zone.
Okay, well, that's your view on Voltas, and with that we'll quickly start taking a bunch of queries. So let me get on to Tamil Selvam, and his question is on Indian Oil Corp. He's bought a 155 call at 3.8, and pardon me, he has sold the IOC 155 call at 3.8, and he says that he's expecting some downward movement. What is our experts' view on Indian Oil Corp? Let's bring up Indian Oil Corp. Perhaps if we can also bring up that specific option as well. It's currently at around 148. That's where its underlying is, and of course Tamil has sold the 155 call. It is showing some amount of weakness, and he is actually making a little bit of money too, considering he sold it at 3.8 and it is currently at 3.5. Gaurav, can we come to you on Indian Oil Corp, your view here, and how would you, what would your advice be as far as this specific option is concerned?
Well, if you look at the overall trend, it has been quite weak. It has a strong resistance at level of 160. So if he has sold a 155 call, can be a good strategy. Having said that, if you look at last 2 or 3 months data, then 145, 146 is the level from where we have seen some reversals happening, and at times these reversals have been quite sharp. One needs to be a little bit careful on that part because it's already quoting around 147, 148. So there can be another 2-3 rupees downfall cannot be ruled out. The pressure would again mount once it breaks and trades below level of 145, in which case you can expect levels of 138 can also be touched upon. So for me, keep a very close eye. If it's not breaking 145, then I would recommend to book the profits off the table. And if it breaks 145, then one can hold on and keep with trailing stop losses, or maybe add one more short position, can head towards the level of 140 and below.
Okay, that's about IOC, and the index is back into the green territory. Nifty is now trading around those levels of 11,300. Our next query comes in from Vivek Kanodia. He wants a view on Apollo Tyres, which was weak in yesterday's trade. This one too had reacted negatively to the numbers, were pretty weak at the operational front. And the other one is Petronet LNG, which is trading quite close to its 52-week high of 255 rupees. Nilesh, if I could come to you on the charts, would you recommend any sort of trade on stocks like Apollo Tyres or on Petronet LNG?
Well, Apollo Tyre, the structure is quite weak. It has yesterday provided a fresh breakdown from the levels of 190, currently trading below that. So as long as it trades below 190, I would say it has a potential towards 170 or 165. That levels cannot be ruled out in the short-term period. Overall, structure still looks quite weak. It is better to avoid initiating any long position at current level. One should better to wait for the stock to come the levels of 190. If at all it reaches or breaks above 190, there could be a possibility of initiation of a long position. As of now, there is no fresh long position trade in Apollo Tyre. Whereas the other counter is Petronet. It is on the verge of a fresh breakout. Yes, one can initiate a fresh long position at current level as well. It has a major support levels at 230. With a stop loss of 230, one can initiate a fresh long position for the upside target of 245. So that is the immediate target, followed by 250. So these are the two targets. One can initiate a fresh long position in Petronet.
Okay, we have time to take maybe just one or two more queries. We have Krishna, who wants a technical view on Yes Bank, wants to know what can be done with that. He also has a query on Sun Pharma, but let's take Yes Bank first. Gaurav, Yes Bank is to you. What would you do with this one looking weak?
If you talk about names like Yes Bank, which have been plagued by news and which have been quite volatile, technicals generally do not work in a very beautiful manner in such names because the volatility tends to be quite high. For now, the trend is still weak. I would not recommend buying here. For any buying, one has to wait till levels of 180. Buy above 180, keep a stop loss of anywhere around 175, 176 on the upside. 190, 195 is what I would be playing out for. Till then, I think it's an avoid. At these levels, if somebody wants to take some risk, then probably buying a put option can also make sense. But one needs to be a little bit careful here.
Okay, and what about Sun Pharma? Nilesh, do you have any view on Sun Pharma on the charts?
Well, all the pharma counters are under pressure, especially Sun Pharma. It has made a lower high and lower low formation, looks quite weak. 430 is the immediate support level. So if at all somebody has a long position, one can keep a stop loss below 430, and one can expect a pullback rally towards 445. So as of now, avoid initiating any fresh long position in Sun Pharma.
I think we can take just one more. I'm going to squeeze that in. We have Naveen Bandaru who wants a view on Tata Motors. He also has a question on Sun TV. If we can manage, we will. But Nilesh, let's start with Tata Motors. Your view here.
Well, Tata Motors, we have earlier seen a breakout from the levels of 200, then a rally towards 235 to 240. But again, it has retested those level and is still trading below 200 kind of a levels. So till the time it doesn't break above 200, I think the undertone is slightly on a negative side for the Tata Motors. Well, for immediate basis, we are expecting some sort of a pullback rally from last two trading session. It is forming base around 185. So with the stop loss of 185, one can stay all the long position for the upside target of 198 to 200.
I will take Sun TV up with you, Gaurav. Any view here?
At current levels, it does not look too enticing. It has a strong resistances ahead, but if somebody wants to play, the right way to play this would be on a positional basis, and you buy around level of 510, 505 whenever it comes, because there's a bullish harmonic pattern being formed at those levels. Keep a stop loss of 490 on the other side. If those levels are triggered, it can go towards 565, 570. Till the time it does not happen, I think it's going to be quite volatile and it's best avoided at the current prices.
Enough. Guys, I'm going to take a moment to thank both our experts then, Gaurav and Nilesh, for joining us and taking us through their views on the markets, also solving some of our viewer queries. For more updates on the F&O space, you can check our website out, bloombergquint.com, specifically the futures and options pages. And on that note, it's a wrap on this edition of the F&O Show. For more news and updates, stay tuned to Bloomberg Quint Live.